Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 11th of February 2021. Alright everyone, let's get into the news from the last 24 hours. So, bit of a crazy time right now, especially in the markets, I guess. It's been like that for a few weeks now, but yeah, it's just feeling even crazier and crazier. And I put this tweet out today, and I'll read out what I said. I basically said, quote, just going to put it out there, social signals like celebrities shilling crypto ain't going to work as a top signal this cycle. Crypto is mainstream now. In 2017, we didn't have billion-dollar companies putting BTC on their balance sheets. Embrace it, respect the pump, end quote. So obviously, respect the pump is a reference to a meme where Ivan on Tech was saying this in one of his videos. If you haven't seen that yet, it's quite funny. But I guess the general gist of this tweet is basically to say, I see people always messaging me and, being like, all these celebrities are shilling everything. Like, is this a top? Like, are we going to crash? Like, this is crazy. And I get that. But, there's a lot of different top signals you can kind of look for, right? And I think celebrities shilling crypto is not one of them at this cycle, simply because of the reason I gave, right? Where I believe crypto is mainstream now, where it's kind of in the mainstream consciousness and a lot of people are paying attention to it now. We had the Tesla Elon Musk news the other day, right? We've had other companies put BTC on their balance sheets. We have traditional investors like talking about ETH and talking about DeFi. And we have like all these other celebrities coming in through NFTs. So, I think that, and I followed up this tweet saying that I don't think that this means that everything's going to go up forever and that this time is quote unquote different or anything like that. But I think trying to pick a kind of cycle top based on celebrity signals is gone. It's just not going to be effective. In saying that, like I have my own kind of top signals that I look out for, but I just don't know. Like no one knows, right? You don't know it was the top until kind of way after, because if you actually look at what happens at the end of a cycle, we have like a massive crash, right? And then we have what's called a dead cat bounce. So what this references is that the price will kind of bounce from there. You'll get a lot of people buying it up, right? And it'll kind of bounce and it won't go back up to all-time high. It'll like just go below it, right? And that'll give people hope that, oh, that wasn't actually like the crash, that wasn't actually the cycle top. We're actually going to keep going up. But the reason it's called a dead cat is because it bounces, right? But then it goes back down after that. And that's when, when it goes back down and every time it tries to bounce, it keeps going down. That's when you kind of know that, that we topped, right? Because we've seen the crashes, right? We've seen the 30% crashes in a day, not in a day, but like over a few days, right? In a bull market, and they happen frequently. But, there's a bounce there and it's not a dead cat bounce. It continues up, right? It continues higher. And that's because people are still feeling really bullish, right? There's buy pressure there. It's people aren't feeling bearish right now. So there's that side of it. For me, a big top signal in 2017 for me was when absolute kind of trash was pumping, right? When these things that are like dead, no one even cares about them, and they're just pumping for no reason. And I'm not talking about like the other kind of, I guess like chains, like the Ethereum competitor chains. I'm literally talking about things that are literally dead, right? They were like old forks of Bitcoin and, no one cares about them. They're essentially almost scams. But they pumped towards the end, like really hard, because people were like feeling invincible, right? Everyone thought they were going to win. No one thought they could lose. So you had this kind of, I guess I like to call it like a swan pump, where it was like the last pump. And that was a clear signal back then. But in saying that, the same thing's happening right now, and it's happening in a pretty big way too. But I'm not feeling like we are at a top yet. I'm still very bullish. I think that the reason why it's happening sooner this time is because we have just so much new money and new people coming into this ecosystem right now. It's actually mind-boggling. Considering that I actually think in 2017 we had more people than we have right now, but we're quickly approaching parity, and I think we're going to pass that. And I think the fact that the traditional finance system is like more involved this time and bigger money is more involved. Like I talk to people all the time and they're like, the institutions are actually here outside of BTC now as well. They're interested in ETH, they're interested in DeFi, they want to know how to get exposure. So that from that angle, like it's very hard for me to be bearish, like on the kind of macro scale, because the way I look at it is like a scale. On the one scale, you have like the euphoria, the end of the kind of bull market, all the crappy stuff going on that you think are like top signals. And on the other scale, you have the new money flowing in. So as long as the new money is kind of heavier than the, the top signals, so to speak, then we're going to keep going. And no one knows, when the new money is going to stop coming in. I mean, the only way you could actually figure that out and kind of look for a good signal is if you were like a centralized exchange and you obviously had data on how much new money was coming in, what your, new user signups were like. Those kind of places are best positioned to kind of look at that. But even still, like, I mean, I just thought of something. Coinbase is IPOing this year, right? Coinbase hasn't even IPO'd yet, and that's going to bring in a ton of fresh interest and capital, I think, too. And, I don't know where we're going to top. All the signals that I used to use are moot right now. None of them work right now. Because of the fact that we've just like basically widened the reach of crypto to basically everyone now. And I think we're going to see, a lot of people coming in because of that. So yeah, just a little bit of thoughts on that. I know yesterday I might have sounded a little bit bearish, and I kind of was because like I was looking at CoinGecko and I was like, this is just insane. Like, this is how I felt at the end of 2017, and we all know how that ended up happening. But then I took like today to kind of really think about like, think it through like from first principles and think about all the stuff that's still bullish about the ecosystem and still kind of like lasting and what we still have to look forward to. And it kind of counterbalanced that. Like my scale tipped back to, okay, like I'm pretty bullish, even though all this other crap's happening, I'm still bullish. So yeah, I just maybe wanted to clarify a little bit of what I was talking about yesterday too, because I had a couple of people messaging me about it and saying, "Oh, you're bearish." I'm like, no, not necessarily bearish, just like cautious, I guess you could say, because you always want to be cautious. You always want to kind of like make sure that you're in a position that if we do go into another bear market, that you're fine. And I actually live by a rule that you never want to be 100% out of the market, but you never want to be 0% out of the market either, right? So you want to kind of strike a balance. And what a lot of people like to do is they like to sell on the way up, which I think is actually like totally fine. Even though you're still bullish, you're just taking risk off the table essentially, right? You're basically potentially going into stable coins and just yield farming with it. I mean, that's something you couldn't do in 2017. Now you just cash it out the stable coins, pay your taxes if you have to, and then earn some yield on it, which I think is really cool as well. So yeah, I've gone through why I'm still really bullish on Ethereum. Obviously, in one of my refuels the other day, I think it was last week, I went through like 20 minutes of just why I'm extremely bullish on Ethereum and ETH, and that nothing's changed since then. I just think that we could have like local tops where the market dumps 30% again, and everyone thinks, oh, is that it? Was that it? Right? And that happened 7 times in 2017, I think, until it actually was it. So this isn't unusual. This isn't foreign. This is just par for the course, and you have to be prepared for it, basically. All right, so an interesting tweet from banteg today, one of the Wi-Fi core developers. So and I'll read out the tweet. So he said, "People really underestimate how alluring to builders Ethereum's credible neutrality sounds. There is simply no way the next visionary project is launched on an Ethereum killer. They will remain a home for heavily subsidized low-effort forks with genuine innovation coming from Ethereum." Now, obviously, lately we've been seeing a lot of these, I guess, other blockchains kind of come to prominence in the social sphere because of Ethereum's high fees, right? And one of them is Binance Smart Chain, which I've mentioned before, and I've been talking about on Twitter a bit. And for those who don't know what it is, Binance Smart Chain is a straight up clone of Ethereum, like a legit clone fork. It's using the exact same kind of code base. It's just kind of ripped out proof of work and replaced it with these kind of distributed nodes. There's like, they say there's 21 of them, but in reality there's like one, and that's Binance. They control the whole thing. So it's just a centralized version of Ethereum. And I kind of find it funny because there's a deep irony in that the only thing that's been able to get any kind of traction outside of Ethereum is a centralized clone of Ethereum. And, outside of that, to Banteg's point here about people wanting to build on a credibly neutral platform, this is why I'm the most bullish on Ethereum, why I have remained the most bullish on Ethereum, is that the developers that come into our ecosystem are developers that are basically like the best of the best, essentially. They are coming in for all the right reasons. They want to build something, right, that's going to change the world. They want, the genuine innovation, as Banteg says, is that it's happening on Ethereum because of that. These people don't want to come from like the old centralized world and then just build on one of these other chains that they don't consider to be credibly neutral and decentralized. So that's why with Binance Smart Chain, all you see, the apps on there are just clones of the Ethereum apps, and they're low effort clones, as kind of Banteg says here. They're nothing special. And, I'm not trying to like crap all over it, but for me, being around for so long, Binance Smart Chain reminds me of EOS from 2017. And it was the same story back then, same playbook. You know, we're more scalable than Ethereum, we're doing more transactions than Ethereum, come to us, blah, blah, blah. And it literally exact same playbook, exact same kind of like architecture as well, where you have these kind of centralized nodes essentially. And back then I was dealing with the same thing with people kind of like shilling this thing, being like it's going to kill Ethereum, blah, blah, blah. And we all saw what happened, right? Not just the price of EOS, but like the platform itself, just there's just no community there. There's no developers there. There's just nothing really, from what I can see. And you know, the market's moved on now. They're onto the next Ethereum killers, and it wasn't just EOS. It was like Neo, and there was like Qterm, and there's a bunch of others out there. And I'm not trying to single out any projects, but like there's no denying that these other projects don't really have any traction. And I'm not saying maybe some of these newer ones don't get traction sometime in the future, but there's a reason Ethereum has remained the leader, you know, even though it has all these issues, right? Ethereum is the least scalable blockchain besides Bitcoin, right? I think actually Litecoin is probably less scalable, but in general, like no one cares about Litecoin. But in general, like there's a reason why that people still use it. The network effects are just so strong. And I've spoken about this a lot on like yesterday's refuel and stuff. And, you know, maybe I'll do a dedicated video on this because I feel like I'm getting so many questions from people about why Ethereum is going to win, why I think Ethereum is going to continue being the dominant platform. And I need to just kind of put my all my thoughts out there because I could go on about it for like an hour. So it obviously needs a separate video. But yeah, I think I wrote about this in the Daily Gwei newsletter today as well about Ethereum's spirit. And that can't be replicated by these other platforms. And that's because the Ethereum system itself kind of lends itself to those kind of community members and brings them in and you know, kind of forms that spirit within it. So yeah, just a little bit of thoughts there. I'll digress for now. I probably will put out a video with my full thoughts on like competitors and why I think Ethereum is still going to win. And that's probably going to be a long video because there's so many pieces to this puzzle that you really need to kind of dig deep to understand. You know, the most surface level argument is saying Ethereum's going to lose because it's got high fees and other chains are more scalable. If that is your entire argument for why Ethereum is going to lose, right, then to me, you've just got no idea what you're talking about, if I'm being frank, because there is so much more to that. And we've got so much evidence, years and years of evidence of this. And if I'm being honest, the most valuable network by far that's almost $1 trillion in market cap is Bitcoin. And Bitcoin does not scale at all. It's like 3 or 4 transactions per second. Their layer 2 system is basically like the Lightning Network is meh, right? Their layer 2 system is crypto banks, centralized exchanges. But Bitcoin is still worth a lot for all the reasons that Ethereum is still worth a lot and still kind of like as a platform, in my view. So, or still like a leader as a platform. But anyway, I'll probably cover that in a video sometime soon when I've got some time to sit down and do it. But I digress for now. So really, really bullish news out of MasterCard over the last 24 hours, which I actually missed initially this morning. And then later this evening, I was like, wait, what? Where did this come from? But basically what it is, it's MasterCard saying that they're going to be supporting cryptocurrency on their networks. So this is pretty insane. I mean, Visa has already announced this, I think like a few weeks ago, that they're going to be supporting crypto, specifically like USDC and stuff like that. And MasterCard, you know, put out this press release and basically said the same thing, but they didn't kind of note what currencies they're going to support. They just said that they're going to be supporting cryptocurrencies. I mean, we can already guess that it's going to be BTC and ETH right straight up, but I think they'll actually follow the PayPal playbook as well. So they may support like LTC and BCH, things that are like not considered securities. I think that's like a pretty big thing for these companies. They have to be sure of that. But I'm curious to see if they'll support stablecoins. I mean, I think they will, right? Like it's a no-brainer for them to support USDC, for example. I don't know if they'll support Tether. I mean, it's a bit of a gray area there. But USDC, I'll be over the moon if they supported DAI. That'd be really awesome. But yeah, it remains to be seen. But the fact that they're actually getting involved, it just, I mean, as I was talking about before, the amount of traditional finance people and companies coming into this ecosystem now is what makes me the most bullish, because that's where all the money is. It, like literally 99.99% of the money is in that system. DeFi is still a rounding error, crypto is still a rounding error, and if that money is kind of making its way into crypto, and if only like 10% of that money makes its way into crypto can go to like a $10 trillion total market cap essentially, which is insane, because, you know, if we're going off like the long tail distribution, that would put ETH at over 10k for sure, and BTC would probably be $300,000 or something. So this is the kind of power of that money coming in. And all these companies signaling that they're going to support crypto is the same kind of signal that Elon sent when he bought BTC with Tesla, in that this is legit, this has lasting and staying power, jump in with us, right? This is safe now, you know, we're cool with it. So yeah, very bullish news out of MasterCard today. So ETHGlobal's MarketMake hackathon finished, and there was judging that I actually was a part of a couple of days ago. It was really fun to judge all these projects. The finalists have been listed, with the winners kind of being announced, I think, today at 12 Eastern time. But yeah, you can see all the finalists here. There is a bunch of different projects. I think there's about 10 projects here. I'm not going to go through them all, but you can check out this tweet thread in the YouTube description. But what I did want to talk about is that the ETH Global events are some of the best for finding new projects and new talent building new Ethereum projects. So for those who don't know, ETH Global is kind of like run out of the Ethereum Foundation, or at least is like, I guess, part of the Ethereum Foundation, but maybe they've spun out at this point. I mean, I'm not totally sure, but like they definitely started in that kind of in that arena there. So they're always very high quality events, very high quality hackathons, if not the highest quality hackathon we have in Ethereum. Maybe ETH Denver as a close second there. But there's always projects that come out of this that are super, you know, innovative and super, and some of them end up changing the game. So, I mean, as I'm scrolling here through here, you can see like all these projects basically. And as I said, you can check them out yourself. But it's cool to see. I mean, there's stuff like, you know, what's this? Orca protocol, a flexible and adaptable DAO implementation. So, you know, it's not just DeFi that's being worked on, right? It's DAOs as well. This thing called Paladin. Paladin is a governance lending protocol. This new money ledger allows users to benefit from additional APY while helping governance activists user inactive voting rights. So yeah, I mean, like, what else is there here? Like arbitrage, like, I mean, Lev Aave. I mean, a lot of Aave projects here. Gearbox protocol, under-collateralized protocol for margin trading. I mean, a lot of it is DeFi, but there's still DAOs and governance stuff happening too. So yeah, anyway, I'll let you guys check it out because I don't want to butcher kind of like the kind of overview here. But yeah, be linked in the YouTube description for all of you to check out. So I've spoken about Loopring a lot over the last few weeks, I guess, on the Refuel and how they've been growing. And I looked at their TVL today, and I didn't realize it was up at over 200 million actually, which is amazing. And you can see the growth here has just been explosive, right? From like 30 or 40 million at the beginning of January to over 200 mil now. And I put out this tweet, and I basically said necessity, aka the need for cheap and secure transactions, is the mother of invention, and Loopring has been there to answer the scalability call. And they have, right? The only reason why, I mean, maybe not the only reason, but the main reason why Loopring has been able to get this traction is because there is a need now. People are being priced out of layer one. They need a solution. Loopring is there to help them. So that's why we've seen this tremendous growth here. And it's not just Loopring, you know, a lot of the other ones are getting growth too. There's a lot of, I mean, everyone's pretty much talking about scaling in layer 2 right now, which is actually one of my theses for why gas fees being high was actually a good thing. And I wrote a piece in June of 2020 arguing that gas fees being high is basically a shelling point for the entire ecosystem. It affects every participant, right? And because it affects every participant, they're all going to work together to fix it. So I'm really happy to see that thesis playing out because I'm pretty proud of that I was able to kind of call that. But for me, it was just like, you know, going back to what I was saying about the Ethereum spirit, it's also got to do with not giving up, right? The builders aren't going to just give up on Ethereum because it's got some problems and some scaling worries. They're going to stick around and fix them and work together to do it. So the fact that we have this shelling point in the high gas fees just kind of strengthens the bond of the Ethereum community and the developers, and kind of gives us a more healthy and better network, I think, as well. So Synthetix have voted to approve the first, I guess, creation of a synthetic asset for Tesla shares on their protocol, which is really, really cool. You can basically do zero slippage US stock trading using Synthetix when this is implemented. There's also kind of another protocol, I think, called Mirror Protocol from the Terra ecosystem that's doing kind of these synthetic stocks. But, you know, I'm an SNX holder, so I've always been bullish on Synthetix doing this. And this is one of the main reasons I actually kind of bought SNX, is because I think synthetic assets are amazing, but I think they're even more amazing for assets that aren't blockchain native, right? Because you can have a synthetic asset for ETH, and that's all well and good, but ETH is Ethereum native. stocks and bonds and equities and all this kind of stuff, they aren't kind of native to the chain. But all you need is an oracle and then a synthetic implementation on Synthetix to kind of trade it. So, and I don't want to trade stocks in the traditional system. I want to trade them on Ethereum like I trade any other asset. And that's exactly what Synthetix is going to enable now with sTSLA. And I'm sure like other ones coming down the pipeline too. So very, very excited about this. And you can go check this out as well. I'm not sure when it's going to be implemented. It says when the first available deployment window. So it should be sooner rather than later. But once that happens, I might pick up some sTSLA. I'm pretty bullish on Tesla in general, but we'll see. You know, the Tesla chart looks like a crypto chart. If you go look at it, it's just like straight up. But yeah, we'll see what happens there. So Frank Chaparo from The Block has put out this tweet today saying that, and I'll quote, Alliance Bernstein, a $600 billion asset manager, is explaining to clients the importance of SushiSwap and Uniswap. And he's got a slide here of them explaining it. This is stupidly bullish, right? Like I was just saying how traditional finance is coming into this ecosystem. And I didn't think they would be at this point of the kind of cycle where they're explaining not only Uniswap, but SushiSwap to people. And they've got 1inch listed here and Balancer and Bancor. And they're using TVL as a term, total value locked. That's not a traditional finance term. That's a crypto native term or a DeFi native term. So, I mean, again, this theme of new kind of institutional, traditional finance money coming into this space is what is counteracting all my other top signals that I've looked at before. Because this money comes in, you know, slower than other types of money, but it comes, and when it comes in, they allocate to fundamentals based things. They don't allocate to just crap, and they don't just sell right at like a retail investor would sell like during their first crypto kind of rodeo. They make concentrated bets and they hold them, and they make sure that they don't just like panic sell or anything like that. So this, yeah, and as I said, this is counteracting all the other top signals that I'm kind of seeing, which is kind of pretty funny here. And then there's another tweet here. Frank's quoting the kind of deck, and it says DeFi dApps currently offer a variety of financial services, including lending, borrowing, and financial exchanges. In this sense, DeFi competes with banks and financial institutions, though DeFi is nowhere close to their size yet. And then Frank just adds yet with like a monocle with the monocle emoji. Yet, right? That's a pretty key word there, because it doesn't say that they never will get there. It just says that they're not there yet. So yeah, this is just, as I said, this is the thing that's making me the most bullish right now, is that they're not. I actually figured the traditional finance system would fight against this more than they are, but I think they might just be seeing the writing on the wall really early for some reason, which is kind of insane. And you know, we've had banks actually work with crypto before. Like we had JP Morgan be a pretty early adopter of kind of like this technology. Doing they actually made their own Ethereum client that was forked from Go Ethereum called Quorum. But I mean, this is just so bullish. Like I would rather them not fight us and just embrace this tech and learn to work with it, because that just means we'll get adoption much faster, and we'll kind of like get this reality that we want to see with kind of DeFi taking over the world. We'll get that out a lot faster. And I mean, they're a $600 billion asset manager. Like they're not going to put $600 billion into DeFi, right? You know, but even if they only put like 1% of that into DeFi, that's $6 billion, right? 1% into DeFi. I mean, I can see that. That's not anything too crazy. And that's $6 billion just from one asset manager coming into DeFi. And you might think, oh, you know, DeFi's got a really large market cap. It's like 50 billion or something like that. Yes, but the market cap doesn't matter when you compare it to like the new money coming in. Buying $6 billion worth of DeFi assets, just as an example, right? Would move the DeFi total market cap probably up to like $300 or $400 billion, because not only is it buying the assets, pushing the price up and pushing the market cap up as a multiple. So for example, for every $1, it maybe pushes the market cap up by like $5, but it also signals to the rest of the market that there is this incredible buy pressure on these tokens, and everyone else starts bidding it up. So yeah, that's the most bullish thing happening right now in my eyes for this space, and gonna keep watching this, because the more this happens, the more bullish I kind of get here. So there's a new Yearn interface out today. Andre just tweeted out this link, didn't say anything about it, but if you go here, you can see that There's a new interface here for the different yield farming I guess like opportunities. You can sort by like V2, V1, earn, like things like this, and active vaults and stuff like that, or active like what you're kind of in with your own wallet. So yeah, it's good to see them kind of experimenting with new interfaces here. I think this isn't perfect, but it's better than what they had. I think one thing that Yearn has kind of struggled with is definitely UI and UX, because I think a lot of them definitely are very powerful kind of builders in the back-end sense, like smart contract developers and building out strategies, but they seem to have a little bit of weakness around the UI UX. But this is a step in the right direction for sure. So yeah, really happy to see this. So Hayden put out a pretty snarky tweet today, which I thought was quite funny. So CZ from Binance tweeted out that there was kind of an issue with the Binance centralized exchange, not the BSC chain, the actual exchange, where it was down for about 30 minutes, I think. And so Hayden Adams put out a tweet where he said, and he's the founder of Uniswap, and he said, Uniswap will be coming back online soon after a temporary outage. Oh wait, never mind, it has never gone offline. And then CZ responds with, worry about Pancake Swap, which is like a Uniswap clone on BSC. And Hayden kind of responds with like a laughing emoji here. But I want to focus on that kind of parent tweet for a second here. Even though the gas prices are high, right, and it's expensive to use, the Ethereum network is still usable if you can pay those fees, right? It has not gone down I don't think the Ethereum network has ever gone down, like gone offline. Even during the Shanghai DOS attacks in late 2016, the network didn't go down. So from that respect, the fact that Ethereum is such a highly available platform that you can use, if you can afford it, right? If you can pay the fees, I think is really special because, you know, no matter, I guess, like how much activity hits the network, it's bounded by the gas limit, as I've described before, right? And because of that, yes, there are other trade-offs here where it's expensive to use, but the high availability is the trade-off. And I like that. I would rather us have high availability for these systems where they're always available as long as you can pay the fee than have like, you know, zero fees or whatever, or cheap fees, and then the system goes offline every now and again. Because I think, as I said, we're scaling by a layer 2. I've said this plenty of times. I think, you know, the cheap transactions can happen there, but we need this highly available main chain that's highly secure as well, which is why we're scaling layer 2, for example. Now, I mean, obviously comparing a decentralized blockchain like Ethereum to a centralized exchange like Binance is maybe a little bit of a fool's errand, but these are the people we're trying to disrupt. These are the companies we're trying to disrupt. So yeah, just wanted to make a note there. I thought that was quite funny. All right, last thing here from DCInvestor on the layer 2 subject. So he says, okay, Gemini, Coinbase, and Kraken, whoever bridges directly to Ethereum layer 2's ASAP gets my business. If you do it, I promise I'll bring friends. Like or RT if you're in. Ethereum L2s include Loopring, Optimism, ZK Sync. What say you, Tyler, Cameron, Brian, Jesse Powell from Powwow. Sorry, his Twitter name is Jess Powell from Kraken, and Tyler and Cameron from Gemini, and Brian from Coinbase. This is what we need for layer 2 kind of adoption as well. We need these centralized exchanges to all adopt the same kind of layer 2 payments infrastructure, and then they can all talk to each other. So you could imagine them adopting something like Loopring Pay, for example, where instead of having to send Ethereum-based assets through the Ethereum main chain, Coinbase can just send it through Loopring to Kraken or to Gemini, because there's a lot of arbitrage transactions that go on, or to like an Ethereum user's wallet on Loopring, or whatever solution they choose. This needs to happen. It needs to happen ASAP in my eyes. I know that for these big companies, they move very slowly, and it's harder for them to just do it, right? They can't just like say one day, okay, we're doing layer 2, and then the next day it's done. They have to go through like a whole product life cycle, which I totally understand, but they need to get started on it like yesterday. They need to already be working on this, and I hope they are. I know Coinbase in their mobile wallet already supports Optimism as a testnet for now. They were one of the first to adopt that, but we need all these exchanges to agree on maybe 1 or 2 L2s to kind of like really get that adoption there. And I know that Omise Go's Plasma chain was adopted by Bitfinex with Tether, but I don't think any other exchanges have adopted it yet, so there's not really any use for people to use it right now. So we definitely need more exchanges to kind of adopt this tech, which I hope to see kind of this year as I guess the Ethereum network remains expensive and more users will probably demand it. Because at the end of the day, if enough users demand it, these exchanges will implement it because it'll be worth their time, worth their money, worth their kind of resources to put towards something like this. All right, that's it for today, everyone. Thank you again for listening and watching. If you haven't subscribed yet, be sure to do so. Give that video a thumbs up, join the Daily Gwei Discord channel, and subscribe to the Daily Gwei newsletter. And I will catch you all tomorrow. Thanks, everyone.